Hey everyone, welcome back to Corporate Decoder. Today Maxi just filed an 8K and I'm seeing some interesting updates related to their merger. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about giving shareholders more information on a major deal. And it seems like they are trying to clear up any potential confusion or issues that have popped up. So what we have here is an update, a supplement really, to a previous filing about a big merger deal. MasterCraft Boat Holdings Incorporated is combining with another company called Marine Products Corporation. This is a stock and cash deal, meaning some of their shares will be exchanged and some cash will change hands. This merger was first announced back in February of this year, 2026. Back then, they expected it all to go smoothly. They filed a big document called a registration statement, which is basically a detailed prospectus for shareholders of both companies. This got approved, and they started sending out the combined proxy statement and prospectus to everyone. But here is where things get interesting. After that joint proxy statement went out, some shareholders of Marine Products started sending in what are called demand letters. Think of these as formal complaints saying that the information provided in the merger documents was not complete or accurate. They claimed that some important details were either left out or not presented correctly. These complaints quickly turned into lawsuits. Specifically, 2 lawsuits were filed in New York. The core of these lawsuits is that the proxy statement, the document explaining the merger to shareholders, was misleading. The plaintiffs are worried about false and misleading statements and are asking the court to stop or even reverse the merger. They also want the companies to pay their legal fees. Now, MasterCraft says they believe their original disclosures were perfectly fine and met all legal requirements. They are denying the accusations in these lawsuits. However, to avoid the hassle, the cost, and the uncertainty of a long legal fight, MasterCraft has decided to voluntarily provide more information. This filing is that extra information, designed to address these concerns and hopefully put an end to the litigation without admitting any fault. This supplement basically adds a few more details to the original merger documents. They're not changing the core deal, but clarifying some points about how directors and executives have interests in the merger, how potential liquidity options were explored, and refining some of the financial analysis that led to the deal. One of the key areas they are clarifying is the interests of the directors and executive officers. This means explaining how these key people might benefit from the merger. This can include things like how their stock options or other awards are handled, any special bonuses they might receive for their work on the deal, and their ongoing rights to be protected if something goes wrong after the merger. This is standard practice to ensure transparency for shareholders. They also added some detail about the early stages of exploring strategic alternatives for Marine Products. It mentions that back in October 2023, conversations were happening about how to boost shareholder value, including possible sales to other companies or private equity firms. This just adds a bit more background on how the path to this merger began. Another clarification relates to the timeline of discussions. They've added that by June 2025, MasterCraft had provided a standard non-disclosure and standstill agreement. This is a common step that allows both companies to start sharing more sensitive information to see if a deal makes sense for everyone. Now, a big part of these merger filings often involves financial analysis from advisors. MasterCraft's financial advisor, Wells Fargo, provided some analyses. This filing updates some of the details from those analyses. For example, they've refined the selected public companies analysis. This is where advisors look at similar companies to estimate the value of MasterCraft and Marine Products. They've provided specific enterprise values and multiples for companies like Malibu Boats and MasterCraft itself. For instance, for MasterCraft, the enterprise value was presented with estimated earnings before interest, taxes, depreciation, and amortization, or EBITDA for both 2025 and 2026. This kind of data helps justify the proposed merger price by showing how MasterCraft compares to its peers in terms of valuation. They also updated the discounted cash flow analysis for MasterCraft. This method estimates the value of a company based on its future cash flows. The update specifies the discount rates used, which were between 10.8% and 11.5%. This range was selected based on the advisor's professional judgment. Crucially, this analysis resulted in an implied equity value per S-share for MasterCraft stock. After accounting for things like cash on hand, which was about $81.4 million, and potential taxes, the analysis suggested a range of $35.16 to $38.8 per S-share. This is compared to the stock's closing price of $23.12 on the 4th of February 2026. This kind of comparison is a key part of why an advisor might deem a certain merger price fair. Similar updates have been made to the financial analyses for marine products. Their discounted cash flow analysis, also using discount rates of 10.8% to 11.5%, suggested an implied equity value range of $9.5 to $10.54 per S-share for marine products. This is compared to its closing price of $9.94 on the 4th of February 2026. And for marine products, the cash and cash equivalents considered were approximately $54.2 million. They also presented a second discounted cash flow analysis for marine products, which resulted in a slightly higher implied equity value range of $13 to $14.59 per S-share. This highlights the different perspectives and metrics advisors can use to arrive at valuations. There is also an update to the section discussing the relationship between Marine Products' financial advisor, Truist Securities, and Marine Products itself. They've clarified the compensation and services provided over the past couple of years. This is important for understanding any potential conflicts of interest. Truist Securities and its affiliates have provided investment banking and other financial services to Marine Products, its major stockholders, and related entities over the approximately 2-year period before the advisor's opinion. Truist Securities and its affiliates received aggregate revenue of around $5.5 million from these services. The filing breaks down how much of that revenue came from Marine Products versus other entities. This level of transparency is crucial in merger deals. As with most filings, there is a cautionary note about forward-looking statements. These are statements about future events or performance that are not guaranteed to happen. They've listed many risks, including those related to the merger itself, integration challenges, potential litigation, and broader economic factors like inflation, supply chain issues, and changes in consumer demand. Specifically, risks related to product liability litigation and government or regulatory actions are mentioned. This is particularly relevant for companies in the manufacturing sector like MasterCraft and Marine Products. They also point to other filings like annual reports on Form 10-K and quarterly reports on Form 10-Q for more details on these risks. This is a standard way companies incorporate by reference information from other public documents. Finally, the filing reiterates where investors can find more information. This includes the main registration statement and the joint proxy statement prospectus. They encourage investors to read these documents carefully, especially since they contain important information about the merger. It also mentions who might be considered participants in soliciting votes for the merger. This typically includes directors, executive officers, and other management members. Information about their stock holdings is available in other filings. Looking at this filing, it seems MasterCraft is proactively addressing concerns raised by Marine Products shareholders to keep the merger on track. The updates are largely about adding more transparency to existing information, particularly around executive interests and financial valuations. It highlights the common challenges companies face when undergoing significant mergers, like shareholder lawsuits and the need for clear communication. While the core deal hasn't changed, these clarifications are important for building confidence as the merger progresses. What I'm actually looking for is how these supplementary disclosures will impact the final closing of the deal and whether they effectively satisfy the concerns of the dissenting shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more. We also have a Discord linked in the description below.